All right, so it is currently 8:32 a.m. Eastern Time. The CPI data just dropped about 2 minutes ago, and there's a couple of big updates I want you to take note of. As I predicted, we were looking at about a 0.4 to a 0.6% drop on CPI. Yesterday, we were looking at 7.1 for the month of November 2022. We now have that updated data. We're now looking at 6.5. That's the number everybody has been looking for. Core inflation dropped from 6% to 5.7%. Core inflation didn't drop quite as much because the big change month over month this time were two categories, two subcategories, that being fuel oil and gasoline. Fuel oil dropped by about 15.4%, and gasoline dropped by 9.4%. A lot of that has to do with the fact that many of the increases in fuel oil, which is pretty much everything other than gasoline and gasoline itself, much of the increase that happened in those two areas, those two types of commodities, happened 12 months ago, and the data has now dropped off. So with those two coming down, fuel oil was sitting at, I think, 65% increase last month year over year. Now it's sitting at 41 point something, 41.4%. We've seen a huge drop in both of those, indicating two things. Number one, it indicates that the United States has started to recover from the shock of 12 months ago when Russia invaded Ukraine and the entire petrochemical industry the world over blew up, and everybody had to figure out how to get oil from somebody other than Russia, because all of a sudden nobody wants to have egg on their face by trading with a homicidal nation that has invaded a maybe not innocent, but definitely a nation that didn't ask for a war. But again, that's been 12 months ago. So now that data's dropped off, so everything started to level back out. What this means is a couple of things. Number one, it means that because this was actually 0.6% drop, this was on the more aggressive end. This was on the more liberal end of my prediction of 0.4 to 0.6% drop in inflation. This means a couple of things. One, this means that we're going to more than likely see the Fed tone back and be a little bit more dovish than they already were. So this makes it even more likely that we're going to see that 0.25% basis point rate hike on February the 1st when we see the next Fed rate hike release come out. This also means that the United States has been doing an even better job than what we predicted in onshoring all of its petrochemical needs and making sure that gasoline and fuel oil and all of the different subcomponents, such as oil and natural gas, piped or otherwise, are staying locally, and the United States is being very protectionist around its energy policy. We're not sending a ton of energy over to Europe to the point where it's hurting our own economy. We're building our own economy first and then sending what we have left over to Europe, which is leading to a lot more energy independence in the United States, which is ultimately a very good thing for the United States economy. That tells us a couple of things also. It tells us that we're probably going to have a jump in the stock market in the next 15 to 30 minutes, especially after market open. We're more than likely going to see the Dixie continue to trade sideways, but maybe even have a little bit of a bounce on this, considering that this is United States CPI. And we're also probably going to see a pretty decent-sized jump on Bitcoin over the next couple of hours. The reason that I'm skeptical about that is because there's so much consideration that goes into the Bitcoin price, and it's very potential. There's a lot of potential that this is going to get what's left of the retail to buy into Bitcoin, but the institutions aren't going to care, and they're going to short that movement that goes to the upside. And this could only last a couple of days. So for Bitcoin, this might not actually end up being the biggest thing ever. We're going to have to really take a close look at how this and the effective federal funds rate coming in at 25 basis points has an impact on Bitcoin, because frankly, we've never seen this before. We've never seen this kind of extremely hawkish to then moving to a much more dovish landscape. We haven't seen that kind of landscape in Bitcoin before. We haven't seen how it's affected it, and we also don't know how that's going to stack up against the FUD of what's going on over at DCG Digital Currency Group, FTX's bankruptcy proceedings, and more. So going to be talking about that on Coffee and Crypto today. Hopefully you guys enjoyed, and stay tuned because we have more content coming in that direction. Peace.